If you're someone who's like, hey, listen, I'm going to hold Bitcoin for 20 years, I think you're going to see 500,000. Absolutely. Even less than that, maybe in less than 10 years, you'll see 500,000. But I do think that there's a problem with leverage in this market. So the big thing with the Fed is going to be, what do they say with the new variant, this Omicron variant? What do they say about tapering? So are they going to keep with the tapering that they set before? Are they going to be more aggressive even in light of the new variant? Or are they going to pull back a little bit and say, hey, we may go slower? I'm wagering that they'll probably stay the course, meaning that they'll stay the same in terms of the amount that they already announced they would taper. And they might leave the door open to increasing the taper, the quickness of the tapering going forward. So I think that's the big thing. That's going to affect the 10-year yield. And then that will ultimately affect metals, stocks, pretty much everything else out there.
Okay. I want to take us over now to Bitcoin. People always talk about silver as a volatile market. Certainly Bitcoin gets that title as well. So 2022, what can we expect there?
So I'm in the camp that Bitcoin has put in a double top, a failed breakout, and it's in the 4-year cycle. So again, just thinking about the cycles on Bitcoin, it basically started in 2009. 2013, you had the first big mega spike, which was to about $1,200, $1,300. It then 4 years later went to 20,000. 4 years later from then, by the way, that was 2017. Now we're 4 years later in 2021. So it's literally 4 years. Every 4 years, it seems to have this blow off mega surge to the upside. If you look at this chart, this is the chart this year. Here was your April high. It briefly got above in October and failed. And then it tried again and even making a higher high. And again, it failed. And it failed, honestly, because, there was so much retail bullishness there. It only failed because you had bigger money selling into that. And since then, we've seen a pretty significant dip. So I think honestly, you're going to see a little bit more upside. I'm looking for 53 to 54,000. And then I would get more bearish again for another down move to 40,000. A bounce there, then 30,000. And I even think potential for 20,000 is in the cards, or sub 20,000. So, longer term, again, if you're someone who's like, hey, listen, I'm going to hold Bitcoin for 20 years, I think you're going to see 500,000. Absolutely. Even less than that, maybe in less than 10 years, you'll see 500,000. But I do think that there's a problem with leverage in this market, which is, by the way, Fed caused. The Federal Reserve has caused this inflationary money flowing into the system. Everyone's willing to maximize the margin that they're using because interest rates are so close to zero. It's almost like free money. Eventually that has to unwind. And we've seen already such a dramatic drop. Think about this. The stock market pulled back on the NASDAQ 100, 7%, 8% before it's rallied the last few days. And that move down on Bitcoin was from 68,000 to 42,000. So if you just think about that type of X move on Bitcoin versus the stock market when deleveraging occurs, if the stock market corrects 20 or 30%, you could easily be at $20,000 on Bitcoin. So I will be a huge buyer for the long term when it gets down in that 20,000 range, but I'm in the camp that it has to deleverage before it starts grinding back up.
Right. And of course, one of my questions for you is going to be, at what point would an investor want to enter Bitcoin if they're not in there already, or they want to add to their position? But clearly, it sounds like it depends on what exactly you're trying to accomplish.
Yeah. And again, keep in mind, listen, there's always a chance it doesn't get to 20,000 or sub 20,000. So, if you're someone who wants to put $100 or $1,000 every month into Bitcoin, then your dollar cost averaging and the math will work out for you no matter what. I'm just not the type of person that's going to say, okay, at these levels, I'm going to put a ton of money in, expecting it to shoot up right here. Again, there's too much fluff in the markets at this point. And the risk reward, it just doesn't make sense for me. I see so many other opportunities. Natural gas looks good down here after the big fall. And there's other stocks out there that are better investments in the short term than a longer term trade on Bitcoin.
Okay, here we've seen the markets really continue to rise, with the S&P going up, the NASDAQ going up. And I think, some people are perfectly happy to see that. In other circles, there's a nervousness about whether that can continue. So looking forward to 2022, what are you seeing there? What are the charts telling you about these increases?
Yeah, so let's take a look at the chart right now in the S&P 500. This is the Spiders, which is the ETF that tracks it. And what you can see is really this beautiful channel that the markets have been kind of following. And you can see when we get to the high end, we sell off. we come back to the high end, then we sell off to the low end, then we rally back to the high end. And we've really been stuck in this remarkably since really a year and a half ago, coming back to like May of 2020. And, right now that's holding up great. We are starting to see volatility increasing. And I do believe that that's because you have this, potential tapering by the Fed. And remember, anytime you remove that money from the system, the markets are going to throw a little bit of a fit. So I think increased volatility is likely into 2022. And I do think that if the Fed goes through with tapering, there's no way for current valuations in stocks to stay at current levels. The stocks, the economy is decent, but it's not amazing. And again, inflation is going to eat away at profit margins in the short term. And obviously removing that tapering money is going to eat away as well at these valuations. So my guess is eventually this line breaks. And this is what investors out there, if you're watching this is what you should care about and only care about, this lower trend line. As long as you stay on it or above it, you're really good. You can just go and say, okay, this market's in an uptrend. It's staying in this range. If this breaks to the downside, that's where you need to become concerned. That's where, in my opinion, you actually could see a 10, 20% dip in the stock market, which would really shock investors in the near term here.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Right. And so conversely, if we see the Fed falter on the tapering schedule, or there's another kind of black swan event where money needs to come into the market, do we then see the markets continue to rise?
That's such an interesting question because, I think a little bit, if they kind of back off a little bit, I think that would be a good thing for the markets, at least, not necessarily for all of us out there that have dollars and that are getting diminished by inflation. But what I'm really concerned about here is the Fed is somewhat in a box. And I think that's why when the Omicron variant emerged, the markets kind of freaked out, because if you go back to 2020 of March, when COVID reemerged or came out initially, the markets initially panicked, and then the Fed came in with bazookas of absolute amounts of cash. And they could just print as much as they needed to because inflation was 2% or less. The government, same thing, printing money, sending checks out to Americans, multiple times. The problem is now with inflation at 8%, the Fed is handcuffed. They can't print the same amount of money. The government can't do the same kind of metrics. And that puts things in quite a bind where there's a box around the Fed now of how much stimulus they can supply without making inflation go to 10%, 20% or higher, and creating a real issue for the middle and lower income, citizens of the United States and really around the globe. I mean, all central banks are doing this type of thing. So that's my big concern is the Fed almost seems like they're out of bullets to really attack things in the short term. And I'm wondering how they manage that on both sides.
But I did want to ask, are there any other data points that you're watching that are important for investors to keep an eye on when they think about what's happening in the market right now?
Yeah, so I think you have to continue to watch all the inflationary data. That's going to be a big guide, for what the Fed does. I'm sure the Fed is watching jobs numbers, data on the inflation side, all of that kind of stuff, CPI numbers, PPI numbers. So those are the ones I'm focusing in on. And then I'm really just watching the charts, watching the 10-year yield and keeping a close eye on it. And what I'm really watching here is we've seen a couple big drops in the market, and you can see a chain reaction in the cryptocurrency markets and even in the oil markets, in the natural gas markets. And it's a deleveraging event. And that's really my big concern, is that as the Fed pulls back on the stimulus, do we see a reduction in margin and money that's been borrowed to invest, which has been at all-time highs? And if that starts to happen, it could be a domino effect throughout all markets, including cryptocurrency, and really cause a steep decline. So, there's a lot of things to watch here, but again, it's at what point is it the straw that broke the camel's back, essentially?
Heading into 2022, what is your best advice for investors?
Oh boy. So I think you need, with the Fed saying that they're going to taper, I think you need to be a little bit more cautious on the markets. Again, it's hard to say that when the markets do nothing but pull back and then go to new all-time highs. But again, be careful, because the Fed has now given you hey, we are actually removing money from the system at this point. Instead of pumping 120 billion, they're reducing it, I think, by 15 billion a month. over the course of the next year, that is going to be $1.5 trillion taken out of the system on a monthly or on a yearly basis. There has to be some impact to the market because of that. So that's the big change going into 2022. You do need to be aware of that. Doesn't mean we can't make new all-time highs, but I'm certainly more looking for pullbacks and steeper pullbacks and more volatility because of it versus 2021.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.